CrowdStrike earnings are out. The stock is down slightly after hours at $147.25, down about 1.3%. This video is going to break down the earnings report, also provide some high-level analysis about CrowdStrike. We'll look at the valuation, we'll look at a chart, and I'll provide some commentary if I think the stock is a buy or not at these levels. So year to date, the stock is up about 44%. Over the past year, it's down about 18%. Over 5 years, up 132%. Now this is just over a $35 billion market cap. The 52-week low, $92.25. 52-week high, $197.94. So what's going on with CrowdStrike? Let's break it down. All right, so what happened with CrowdStrike earnings? Non-GAAP EPS, 74 cents. That beat by 18 cents. Revenue of $731.6 million. That's up 36.7% year over year. Beat by $7.21 million. So it's a beat on the top and the bottom lines. And I'll get to guidance here in a second. So ARR, annual recurring revenue, increased 37% year over year and grew to $2.93 billion as of July 31st, 2023, of which $196.2 million was net new ARR added in the quarter. Now, CrowdStrike achieved GAAP profitability for the second sequential quarter and delivers record non-GAAP net income. So if CrowdStrike keeps this up, it could end up being in the S&P 500, something to keep in mind. Also delivered record Q2 cash flow from operations of $245 million and record Q2 free cash flow of $189 million. So you notice that growth is slowing down a little bit, but this is a profitable software company with recurring revenue, and the profitability metrics and free cash flow are getting very positive here. So when you think of the spectrum from hyper growth to growth, mature growth, CrowdStrike is working its way up from hyper growth to more mature growth. It's not necessarily a bad thing, but valuation becomes more and more important. We'll look at valuation here later. And CrowdStrike also has cash and cash equivalents of $3.17 billion as of July 31st, 2023. So strong free cash flow with over $3 billion in cash. Very strong balance sheet here. So guidance for Q3, expected revenue, 775.4 to $778 million. The consensus was $774.43 million. So guidance is being raised slightly. So full year guidance expectations, $3.03 billion to $3.04 billion. That's up from a prior range between $3 billion and $3.04 billion. So they're guiding at the high end of that initial range. Non-GAAP EPS expected of 74 cents, the consensus of 60 cents. And then FY24 non-GAAP EPS of $2.80 to $2.84 versus a consensus of $2.39. So very strong here. So hot off the presses right from the investor relations page. And we covered some of these highlights on the previous slides. A quote here from CEO George Kurtz: CrowdStrike delivered strong growth at scale, exceeding our guidance across both top and bottom line metrics in the second quarter. Our platform strategy sets us apart from the competition, resulting in high win rates as customers rapidly embrace Falcon to consolidate vendors, lower TCO, that's total cost of ownership, and achieve better security outcomes. A quote from the CFO: our relentless focus on execution and operational excellence drove strong, profitable growth at scale and new milestones for both GAAP and non-GAAP profitability in the second quarter. We achieved our target model range for non-GAAP operating margin for the first time in company history, well ahead of our planned timeline, and now expect to exit the year with fourth quarter non-GAAP operating margin within our target model. Beyond fiscal 2024, we expect to sustainably deliver non-GAAP operating margin within the target model on an annual basis. So this is a very strong quarter. Now the growth is slowing down a little bit, profitability is increasing, and it's still not a cheap stock. We'll look at valuation here in a minute. Some important highlights here. So CrowdStrike's module adoption rates increased 63%, 41%, and 24%. And that's for 5 or more, 6 or more, or 7 or more modules respectively. Also got a Partner of the Year award from Amazon Web Services. That's huge. Named a cloud security leader in Frost & Sullivan's 2023 Frost Radar Cloud Workload Protection Platform. And several other awards here from Gartner, Forrester Wave, and more. Tech Innovator Award. Unveiled new Falcon cloud security innovations, including one-click XDR to automatically identify and secure unmanaged cloud assets. And several other announcements here. This is really good stuff. So look at some of these numbers for revenue. This was 2022 right here going to 2023. You can see some nice moves upward here. Also professional services, nice pop here in gross profit. So let's look at valuation. This is on Fidelity. You got price to sales ratio about 14. Of course, that's expensive. We are talking about recurring revenue software as a service, so I'm going to give you some other metrics here in a second. Now, the PE for this year's estimate here on Fidelity is 61.4. And the PE for next year's estimate is 47.6. Now, of course, when you're using estimates, these numbers can be wrong because it's an estimate. So normally when you see PE, you're seeing 12 months trailing. And I'll be quite honest with you, both the PE ratio, the 12 months trailing, as well as the forward PE ratio, they both have their flaws. But I think it's good to use those metrics just to get an idea. We are going to look at things like EV NTM revenue and more. So looking at the forward PE ratio, again, this is an estimate. You can see 62.39, and that's not the lowest it's ever been. It would have been lower earlier this year when it kind of bottomed out. It got below $100 a share. We'll look at a chart here later. That price to sales ratio is 14.37, and you can see it's one of the lowest PS ratios that we've seen. At one point, this was way above 60 here in 2021. Now, just for comparison here, I'm adding Zscaler, Cloudflare, and Datadog. So all four of these companies are going to be those software as a service models with recurring revenue built in the cloud for the cloud. Now, Datadog is a little bit of an outlier. The other three fit very well when you think of cybersecurity SaaS. But the four of these stocks are a good comparison, and I'm looking just at price to sales ratio. So Zscaler is going to be the lowest at 14.31. CrowdStrike not much higher at 14.37. Datadog 15.82, and then you have Cloudflare, the most expensive, at 18.85. So let's look at some of these cloud metrics here. So the EV NTM revenue, this is going to be at 10x. Now that's not going to be the cheapest when you compare against all other SaaS companies, but if you look at the overall metrics in terms of profitability, I mean, nothing really comes close to CrowdStrike when you start comparing it that way. And it does have solid growth. It's just that it has decelerated a bit. Stocks like Snowflake, which are consumption based, but that thing's trading closer to 20 EV NTM revenue. Rule of 40 on this is above 70%, so very positive. 120% dollar-based net retention, that's good. 75% gross margins, and they're at 26% free cash flow margin. CrowdStrike is the pioneer of cloud-delivered endpoint protection. CrowdStrike Falcon is the first and only solution to unify next-generation antivirus, endpoint detection and response, and a 24/7 threat hunting service, all delivered via a single lightweight agent. So this is CrowdStrike's modern XDR platform. Now Falcon's really impressive. It evolved from one module to 23. And this is focused on endpoint security, and really it's about stopping breaches. So on your screen, you can see some of those new modules they've added over the years. So you got identity protection, observability, security and IT ops, threat intelligence, and more. And this is showing you the Falcon platform with that partner ecosystem included. And here's the full stack of the Falcon platform. So it has those different pillars that we talked about earlier, and then granularly there's different modules within those pillars. Supercharging the XDR revolution. So log everything, ingest and digest, and then answer anything. And one thing to note about CrowdStrike is it's been involved with AI really since the start. And back in 2012, some of their AI technology was groundbreaking. So it really goes all the way back to 2011. The Falcon platform was using AI, artificial intelligence, all the way back in 2011. So for a dozen years, this has been evolving. And when you think about Microsoft, it is the primary competitor when you think of CrowdStrike endpoint security. And when you think of Microsoft, it's really focused more on signature-based antivirus. Now, Microsoft has made some strides in this area, and you have other competitors like SentinelOne that also use AI. But looking specifically at Microsoft, Microsoft will have up to 9 consoles, multiple agents, and a higher TCO, or total cost of ownership. CrowdStrike gives you 1 console, 1 agent, and a lower TCO, so it costs less. When CrowdStrike's team investigates a Microsoft customer that has been breached, 75% plus of the time, Microsoft Defender has been bypassed. In fact, Microsoft Windows represents 95% of the compromised endpoints that CrowdStrike ends up fixing. So this is one case study. So a US state with multiple agencies trades up from Microsoft Defender to CrowdStrike. And you can see with Microsoft, there were 60K endpoints, dozens of different versions. Going on CrowdStrike, you've got 1 agent, and projected savings over 3 years is $6.4 million. So that goes back to that lower TCO, total cost of ownership. Another case study, large school district upgrades from Microsoft Defender. And this is saying that Microsoft, 2 to 4 weeks of incident response, which seems like a long time. So when you look at market share, CrowdStrike is number 1, has 17.7% market share. So a significant legacy share remains within the top 10. There's room for this company to grow. Just when you look at the IDC modern endpoint market for 2026, $20 billion TAM. But they have more modules than this, and we'll get to that. So again, going back to the Falcon platform with 23 unique modules. When you look at module adoption, so CrowdStrike is not only trying to find new customers and bring them in, but also land and expand. So grow within that existing customer base and sell more modules to them. And you can see in the green, this is 5+. So this is percentage of subscription customers with multiple cloud modules. The green is 5+, the white is 6+, and the blue is 7+. And you can see that number has been ramping up and they have room to grow, plus they're adding new customers. Rapidly expanding customer base, to my point here. So the starting customers is gonna be in the gray. The green is gonna be the net new customers. And you can see that 5-year compound annual growth rate, 79%. And here's another nice slide that shows that large and expanding TAM, total addressable market. So they're showing the TAM here in 2025 at $97.8 billion. Now in this infographic, they're showing a total of $158 billion, and they're breaking down how. So the IPO in 2019, the total addressable market was $25 billion. In 2023, that grew to $76 billion. With current portfolio, they're saying that their total addressable market is $98 billion. But then they're gonna add additional modules. So organic TAM growth, product roadmap, future initiatives, and so on, cloud security opportunity, that brings that total addressable market to $158 billion. And this is calendar year 2026. And just to show you the customer base here, 556 of the Global 2000, 70 of the Fortune 100, 271 of the Fortune 500, and 15 of the top 20 US banks. And this is just an illustration, an example, it's hypothetical, of how they can get to $5 billion in ARR for FY 2026. So it's showing minimum dollar-based net retention required, 117%, 113%, 110%. Now they just reported 120%. So if they can stay within these metrics, they could get to $5 billion by FY 2026 for ARR. And something to point out here, when you think of SentinelOne, they're focused much more on SMB, so that small and mid-sized business customer. Now CrowdStrike is focused really on enterprise, those larger customers. But with that said, they're winning customers of all sizes. Now I will say that if you're going to bat with a smaller company that has a few hundred employees, that SentinelOne might be a better fit. But just looking at this, you can see the compound annual growth rate. So customers with less than 100K ARR, now this isn't employee count, this is just the ARR count. But you can see a 5-year compound annual growth rate, 82%. For this 100K to $1 million ARR, you got 68%. And then the customers over $1 million in ARR, you've got 71% compound annual growth rate. But be clear, CrowdStrike is really focused on larger customers. That's what they're going after. That's what they're putting the most of their energy into. And we talked about some of those awards earlier. Here's some more on your screen, but they really are the leader. They're the global leader when you think of endpoint security. So next, we're going to look at a chart. I'm going to tell you where I think the stock might go, and I'm going to tell you if I think it's a buy or not at these levels. Now, before we do that, if you're new here, please subscribe to the channel, click that bell for notifications. We're so close to 50,000 subscribers. We just need a couple hundred more. You can help me out today by subscribing. And if this video is helpful, drop me a like and drop me a comment. And I do need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join us in our private community, Patreon, Discord. We're having fun in there. We're crushing it. Check us out. Join us. Head to patreon.com/firedupwealth and check out the options. So next we're going to look at a chart. When you see orange on your screen, that's a previous chart day. Yellow is today's chart day or today's video. Now we do chart day every single Wednesday live in Patreon Discord at 9 o'clock a.m. Eastern. If you'd like to join us for those, check out patreon.com/firedupwealth. So I've made several videos and I've told you I like this stock under $150 dollar cost average for a 5-year long-term investment. Now we did very well in this stock. When you go back to basically the beginning of the year, January, it got down to $92 a share. A lot of people in Discord were really buying this stock $110 and less, and there's some probably higher, 125. You know, now we're at 147. People have actually been nibbling it in these ranges. Did a video recently. I said I liked it $150 or less. It got to 139, popped from 139 to 166, and now it's pulled back. Now this is a 45-degree trend line here from the bottom, pretty aggressive run, you know, basically $92 to $166 in 6 months, or I guess 8 months, but you get the gist. You know, this is a pretty wicked run going from $92 to $166 in 8 months. So this orange line right here, if you can see it, is post-market, 147.83, you can see over here in the blue. So this yellow squiggly line, that's the 50-day simple moving average. These are pivot points, Fibonacci retracement. And you do have a cross here. You've got the 200-day in the purple and the 100-day in the red. Now, if this stock sells off more, it certainly can go lower. And a stock like this that just came from $92, you have to be obviously really careful because there's a lot of room for it to fall. But me personally, I do like this stock, and I like this stock below $150 dollar cost average. I've been saying this for several months and nothing's changed. In fact, I thought this earnings was very strong. It's just not a dirt cheap stock, and it's not the environment where people want to pay a high premium for stocks. But this is a rare beast. You're talking about recurring revenue, software as a service that's profitable, bringing in great cash flow, free cash flow, strong balance sheet. You're not going to find a whole lot of other stocks that really fit into this category. And I've been saying this for a while on YouTube and in Discord. If I were to look at one SaaS stock that I might want to buy based on the metrics, CrowdStrike is probably the most attractive stock in that list. So you got to do what's best for your money. Obviously, this is not a risk-free stock. It's not a cheap stock. Even though it is growing into maturity, there are risks to the stock. I like this company. I like this stock, and I think it's going to be worth a lot more if you're buying it at these levels and holding for 5 years. I appreciate you guys watching. Make sure you subscribe to the channel. Click that bell for notifications. Drop a like, drop a comment. Have a great rest of your day. Take care.